6 weeks into the spring market and houses are still selling in under 7 days. So, where's this housing crash that everyone has promised? If you've been watching the national real estate headlines lately, you'd think that the housing market is either collapsing, frozen, somehow magically back to normal. But that is not the reality here in Connecticut and especially across Middlesex County. The numbers are telling a very, very different story. Because what we're seeing right now is not a crash, it's not even close. What we're seeing is a market that is shifting in very specific ways depending on price point, inventory level, and buyer behavior. And if you're buying, selling, investing, or even renting in 2026, understanding these shifts could save you tens of thousands of dollars. So today, I'm going to break down the full April market data for Middlesex County and actually for Middletown specifically. We're going to talk about pricing, inventory, days on market, buyer competition, what's happening with rentals. And then the biggest thing that almost nobody is talking about right now is the split market that's forming between affordable homes and the high-end inventory. And honestly, some of these numbers surprised even me. So let's dive right into it. First, let's start with the bigger picture across Middlesex County, because this really sets the tone for everything else that's happening locally. In April, the median sales price across Middlesex County jumped to $450,000. That is up nearly 18% from last year. Now, if you stopped reading there, you'd probably think that the market is absolutely exploding again. But this is where context matters, because while prices did rise sharply, the number of sales actually dropped more than 22%. So that combination is telling us something that's very, very important. Fewer homes are selling, but the homes that are selling are still commanding very strong prices. So that's not a weak market. It's actually what we call a constrained market. And when we look deeper into the numbers, we can see why. So in Middlesex County currently, we have about 2.27 months of inventory overall. So for perspective, a balanced market generally sits around 5 to 6 months of supply. So even though inventory has improved from the ultra crazy pandemic years, we're still very much in a seller market territory on most price points, but not all of them. This is where the market gets very, very interesting. So homes between $200,000 or really $300,000 and $400,000 have only about 1 month of supply. This is ridiculously tight inventory, and I'm going to explain some situations I've been in recently in just a minute. But meanwhile, your homes that are $800,000 or $1 million or more, they're sitting in over 7 months of supply. So once you cross that $1 million plus range, inventory balloons even further. What does that mean in plain English? So it means that Connecticut doesn't have one housing market right now. It actually has several different ones that are all happening at the same time. If you're a first-time buyer, or someone is shopping in the more, let's say, affordable ranges, you're still competing aggressively. Homes are moving quickly, buyers are writing very strong offers, and there's still very little room for hesitation. But if you are shopping in that luxury property range, especially above the $800,000 mark, buyers suddenly have a little bit of leverage again. We have choice, we have time, and the sellers are no longer controlling that conversation that they did a couple of years ago. That's one of the biggest themes right now that I'm seeing across the market, is that the market is fragmented by affordability. So let's talk about buyer demand, because part of this report is absolutely fascinating, if you like numbers and real estate like I do. So across Middlesex County, the average property sold for about 3% over asking in April. 3% over asking in 2026. Why is that important? Well, it's important because despite higher rates, right, we're sitting in that 6.5 market or 6.5 rate zone, affordability pressure and constant media negativity, buyers are still competing for the right homes that are right priced. But again, not every home. So when we break down the buyer competition data by price point, homes under $200,000 actually sold below asking on about average, about a negative 3.3%. Why? I'm going to be very, very blunt. these homes need a ton of work, like a shit ton of work. So some have financing issues, others are distressed, and a lot of them are just cash only situations. That segment behaves very, very differently than a different segment. So the strongest competition is happening in that sweet spot between $300,000 and $600,000, especially your move-in ready homes. That is the battleground. And this ties directly to the days on market. The median days on market in Middlesex County was only 7. Get that Friends reference right there? One of my favorite shows. But what does that mean? So that means that half of the homes are selling in this area in a week. So when people are saying the market has slowed down, I'm like, compared to what? Compared to the absolute frenzy of the pandemic years? I'm not so sure about that. But compared to historical norms, this market is still moving very, very quickly. Now, there's one area that we're seeing softening, and this is also very important. Pending sales dropped significantly. New pendings across Middlesex County were down more than 36% year over year in April. That is a huge drop. And I think that this is one of the clearest signs of what higher interest rates are actually doing. So the rates aren't crushing prices broadly across Connecticut, they're slowing transaction volume. And that's the key distinction. Buyers are out there, but fewer buyers can actually qualify right now. And then some buyers are just going to pause. They're going to wait for the rates to drop. We'll get into that another time. And some sellers, they're locked into that low mortgage rates from a few years ago. And unless it's absolutely necessary to move, they're not. So instead of seeing huge price declines, we're seeing lower transaction velocity. Fewer people are moving. So it's creating this weird market where inventory stays constrained, even though demand has kind of cooled from its absolute peak. Let me give you a few examples, of offers that I recently submitted. One house in North Branford, so just outside of Middlesex County, it was priced at $375,000. It had 35 offers and 120 plus showings in 3 days. For another one, it was priced at $340,000. It was a distressed home and it needed a new roof. It had over 100 showings, 20 plus offers, and it went $30,000 over asking. And it needed a roof. So, I mean, like right now, it's still very nuts out there. And it's almost like Connecticut housing is stuck like in this pressure cooker that never fully realizes its steam. All right, so let's zoom into Middletown specifically because that data may tell just a slightly different story. In Middletown, the median sale price in April was $272,500. That actually seems kind of low. It was down 12% year over year. So before you start freaking out and saying, see, the prices are crashing, let's look at it a little bit more in detail. The sales volume in Middletown was basically flat over at, I think there was like 30 sales. But the average sale price was actually up over 17% year after year. So it kind of tells me that the median price dip likely reflects a change in the mix of homes rather than the broad collapse of values. So maybe a few of the higher end homes did not close, maybe more condos or smaller homes closed instead. So that's why you can never just look at one metric in isolation. You have to look at all of it. And honestly, Middletown continues to show something that I've talked about for years: affordability. Affordability keeps it resilient. Compared to many surrounding areas, Middletown still offers relative value despite the higher taxes. And that attracts first-time buyers, investors, a lot of downsizers. We have a lot of over 55 areas here, and even people relocating from higher cost markets. The buyer behavior is reflecting that. Homes in Middletown sold in a median of just 6 days. That's incredibly fast. Properties were also averaging nearly 5% over asking price. So despite some of the fluctuations in pricing metrics, buyers are still competing hard for good inventory, and inventory remains extremely tight. Middletown specifically, we only have 1.37 months of supply right now. So that, again, not balanced, it's scarcity. And here's something else that stood out to me. New listings in Middletown were down almost 8% over last year. And then the new pending sales dropped more than 24%. Again, we're looking at this same pattern. The market isn't flooded with inventory. It's just slower because fewer people are making moves. And that is a big difference. Now, I want to spend a minute talking about the psychology of this market, because I think this is where buyers and sellers are getting really, really tripped up. So a lot of sellers are still anchored emotionally to the peak frenzy years, right? Those pandemic years. They remember homes getting 25 offers in 2 days. And based on my example, we are still getting those, but again, it has to do with price points. People are still waiving inspections. This is what was happening before. And then they're throwing logic away to the bonfire. Now let's talk a minute about the psychology of this market, because I think that buyers and sellers are still getting a little tripped up here. A lot of sellers are still anchored emotionally at that peak frenzy years. They remember what we also call the unicorn years, right? The pandemic years. And homes getting 20, 30 offers in 2 days. And it is still happening, just like the example that I gave. Waiving inspections, yes, that's happening. And they remember buyers throwing logic directly into the fire and financing homes purely with adrenaline. So, and then also 5-6 years ago, those people don't like their houses because they waived all those inspections. Again, another story, another time. So that's not necessarily today's market anymore. Again, it has to do with price point. But buyers are also thinking that the market is weak because they hear the national headlines talking about inventory increases and softening demand. It's just not what's going on here. We actually have a market that punishes mistakes much faster now. If a home is priced correctly, every video I talk about this, if a home is priced correctly and presented well, it still moves quickly. If it's overpriced, dated, or poorly marketed, buyers move on immediately because there's more payment sensitivity than there used to be. And that's the big shift, right? Today's buyers are selective. They're not absent, they are selective. And honestly, kind of healthier for the market. So I'm going to switch gears real quick and we're going to talk about rentals. Rental data is quietly telling us a lot about a broader housing market too. Across Middlesex County, the median rent in April was $2,000 per month. That's up 11% year over year. And at the same time, the number of leases signed dropped nearly 20%. Again, we're seeing the same pattern. Lower transaction activity, but persistent pricing strength. The median days on market for rentals increased to 27 days. So renters are taking a little longer to make decisions also. Competition isn't quite as manic as it was. The rents themselves have remained elevated. When we zoom out historically, the rental trend becomes even more dramatic. 10 years ago, so in 2016, the median rent across Middlesex County was around $1,350. So today, it's roughly $1,950 to $2,000, depending on the metric and the time frame. That is a massive jump over the last decade. And honestly, this is one of the biggest reasons that many buyers still choose to purchase despite higher mortgage rates. When rents keep climbing, the monthly gap between renting and owning narrows. I tell buyers all the time, why are you going to rent if your rent is going to be the same as your mortgage? So I think this creates an interesting dynamic moving forward. Higher rates slowed the ownership market, but rising rents are putting pressure back to the renters to eventually buy anyway. We're stuck in this tug of war between affordability constraints and long-term housing costs. Now let's talk about where I think that the market is heading through the rest of 2026. Based on the data, I do not see evidence of a major housing correction or a crash in Middlesex County. I just don't see it. What I do see is normalization. Inventory has improved somewhat from the absolute lows. Again, depending on segment. The days on market have increased modestly in some segments. Buyer leverage has returned in luxury ranges, and transaction volume has cooled significantly. But the core issue still remains the same. We just don't have enough housing supply relative to the demand. It's economics, supply and demand curve, which I failed. I failed economics. But until that changes meaningfully, Connecticut prices likely remain relatively stable overall, especially in that mid-range affordable housing that we talked about. Now, could we see pockets of price reductions? Absolutely, especially for the homes that are overpriced, outdated, and in weaker demand segments like that luxury. Could we see continued softness in that luxury inventory? Probably. Could rates change dramatically and then alter the market? Absolutely. But right now, the data simply does not support the narrative of the broad housing collapse. It's just not happening here locally. And I think that buyers are waiting for this crash that keeps coming may end up very disappointed. What tends to happen in Connecticut is this. When rates drop, even just a little bit, buyers are flooding back into the market because inventory is still very, very tight. And that creates like this renewed competition almost immediately. So ironically, the buyers waiting for lower rates may end up competing harder later and probably paying more. So now, not like you maybe not want to rush blindly into buying a home tomorrow. So that's not necessarily what I'm saying. What I mean is that you need to strategize. You need to understand your payment comfort zone. You need to understand your timeline, and you need to understand your specific market segment. Because a buyer shopping for a $350,000 home in Middletown is experiencing a completely different market than someone that's shopping for the $1 million home down on the shoreline. There is no longer a one-size-fits-all housing market. Now, if you're a seller watching this, here's the biggest takeaway I want you to hear. Presentation and pricing matter more than it did 2 years ago. You cannot rely on the market alone to carry an overpriced listing anymore. Buyers are way more savvy than they were before. Before it was, again, pandemic. They were rushing. They were waiving inspections. They were doing crazy things. But the homes winning right now are the ones that are turnkey, photographed well, show well online, because that, again, is your first impression, and are priced right from day one. If you get those things right, the buyers are going to be there. They're going to be there in droves, open houses with 50 people walking through in the first hour. The strongest buyer competition that we're seeing is still happening on properly priced homes under $600,000. That market, alive and well. I've got 5 buyers for that market right now. So if you're a buyer watching this, here's your reminder. Don't let headlines make decisions for you. National housing stories rarely reflect what is happening here in Connecticut. Real estate is very, very hyperlocal. So what's happening in Phoenix or Austin or Florida has nothing to do with a move-in ready colonial here in Middlesex County with good schools, decent taxes, and a commuter-friendly location. That is why local data matters so much. And honestly, this is why I spend so much time analyzing these reports every single month. Because behind all of the headlines and the social media panic, the numbers usually tell a much more nuanced story. And right now, the story here is this, plain and simple. Inventory remains low and constrained. Affordable housing remains competitive. Luxury inventory is softening. Transaction volume is slowing, but buyer demand very much exists. That's the market. Not a lot of chaos, no collapse, not a frenzy, just a market that is continuing to evolve. And if you can understand where the leverage exists within that evolution, you can make a really smart decision. So if you found this breakdown helpful, make sure that you subscribe, because I'm going to continue putting out hyperlocal Connecticut market updates, and I'll keep breaking down what the headlines are missing. If you're thinking about buying, selling, investing, downsizing, or even just trying to figure out where the heck this market is heading for your own plans, reach out anytime. I'm always here to talk numbers, strategy, and what's actually happening local versus what everybody is talking about on your local talking head news. So I'm Devon from Dave Jones Realty, where we do everything but the package.